Are you an e-commerce owner doing under 10 million in annual revenue? If so, let's talk about sales tax, because more likely than not, you've already hit your sales tax nexus in a couple different states, meaning you have to start collecting and remitting sales tax from customers in those states. But honestly, even as an e-commerce accountant, sales tax was one of the things that took me the longest to understand. And it's one of the things that many of my e-commerce clients, they complain about as well. They have no idea what to do. So I'm gonna break down exactly how the sales tax process works when you've actually hit your nexus, meaning you have to start collecting and remitting sales tax, and then how to actually set up a system, specifically with a software called TaxJar, to help streamline this entire sales tax process on the back end. So real quick, my name's Arthur. I'm a certified pro advisor inside of QuickBooks Online. I'm also the owner of S&G Bookkeeping, an accounting and bookkeeping firm that works specifically with e-commerce clients to help streamline their accounting on the back end. So we've been dealing with this a lot lately. So let's go break it down for you and make it a little bit easier to understand. So if you're not familiar with how sales tax actually works, here's the breakdown. So step number one is that the customer actually has to buy one of your products. They're actually going to be the ones paying you sales tax. So like I mentioned, number two, you're actually going to be the one collecting the sales tax from your customers. And it's your responsibility as the seller to keep track of how much you've collected from your customers and from which states as well, so then you can remit that to the government authority. And that's step number three. So once the customer actually buys something from you, pays you the sales tax that you keep track of, you actually have to remit that sales tax to the correct Department of Revenue for each state, or whichever government agency keeps track of sales tax. And you're gonna have to do this on a different basis depending on how much you collect from each state. So the more sales tax that you collect from your customers in a certain state, the more often you're gonna have to remit that sales tax. So if you sell high quantities, then you're gonna have to remit every single month, not as much quarterly. And if you just sell a little bit, then you're gonna be remitting sales tax every single year, once a year, to that specific state agency. So let's run through an example real quick. Let's say I buy a $100 product from you. I'm out of Illinois, I live in Chicago, but you're out of California, for example. So given that I'm in Illinois and there's typically a 10% sales tax rate, I would give you an additional $10 for you to collect and keep track of on my behalf. And then finally, depending on your filing frequency, so either every year, quarter, or month, depending on how many sales you get with Illinois customers, then you're gonna have to pay that $10 that I paid you to the Illinois Department of Revenue. So that's kind of the sales tax cycle. It's important to note that the sales tax that you'll be collecting from customers depends on their sales tax rates in their state, county, city, whatever it might be. There's over 11,000 tax jurisdictions for sales tax in the US, so it can get pretty messy, but I'll help break that down in just a bit. So as you can see, you're not the one that's paying the sales tax as an e-commerce seller. It's basically your customers that are paying it to you, and you're just in charge of giving it to whichever state that they're coming from. The complicated thing with sales tax is that you don't always have to collect it from your customers. You only have to collect it once you actually hit a nexus. Now, the book definition of a nexus is just a connection to a state in this case, but there's actually two ways that you can get this connection to a state. So the first part of a nexus is a physical nexus. That just means you have a physical connection to a state. So if you have employees in a certain state, like let's say you're out of California, like we used in the example, but I'm one of your employees, I'm in Illinois, then that would create a physical nexus in Illinois, meaning you have to start collecting and remitting sales tax anytime a customer from Illinois purchases one of your products. So employees, business partners, if you have inventory sitting in a certain state, then that also qualifies you for a physical nexus. Offices in a certain state. So if you basically have any physical presence in another state, you're more likely than not going to be obligated to collect this sales tax and remit it to that state's Department of Revenue. So there is some nuance to this as well, because for example, one of my accounting clients in QuickBooks Online, they're also an e-commerce store. They're based out of Iowa, but one of their partners is a passive partner. So he doesn't really contribute that much to the business. He just invests money, but he's in California. So I had to call the California Department of Revenue and see whether he qualifies for this physical nexus, because he's not actively involved. You know, he's not running the advertising, he's not delivering packages, he's not doing those day-to-day business activities. So they actually told me that if he's not actively involved, if he's a passive partner, then he doesn't qualify for this nexus. And each state has a little bit different requirements. So if you're confused about this, either give him a call or let me know, I can help you out as well. So but just better to be safe than sorry. Get that answer for sure from that Department of Revenue for that specific state. And the second part of this equation is an economic nexus. So let's say you have no inventory, no employees, no offices in Florida, right? But if you hit enough transaction volume in the state of Florida within the past 12 calendar months, then that might qualify you for an economic nexus. So what this means is you're basically engaged in enough economic activity in a specific state that they require you to start collecting and remitting sales tax to that Department of Revenue in that state, even if you have no physical connection to it. So in the case of Florida, for example, they have an economic nexus threshold of $100,000 worth of sales in the past 12 calendar months. So if you're based out of California and within the last 12 months, you've done over $100,000 worth of sales to customers in Florida, then you've technically hit your economic nexus, meaning you have to start collecting and remitting sales tax to the Florida Department of Revenue. So before we hop into TaxJar and I actually show you how to automate this for yourself, so you know how to see whether you've hit an economic nexus, how much sales tax you owe to different states, and even how to automatically file those sales tax filings every single month, quarter, or year, depending on your frequency, I just want to talk about the marketplace facilitator laws. So now a lot of states have actually implemented laws where these marketplace facilitators, which basically, if you think about Amazon, that's the prime example of a marketplace facilitator. They just connect the buyer and a seller. eBay, Etsy, other examples of these marketplace facilitators. They will actually collect sales tax from your customers and file it to their specific states, so you don't have to do this. And a lot of these thresholds, like I mentioned, that $100,000 threshold for Florida, in order to hit an economic nexus, don't include these marketplace facilitator transactions as well. So if you're selling on Shopify, that's a little bit different than a marketplace facilitator. That's basically your own store that you have to manage. But think about Amazon, eBay, Etsy. Those sales will automatically be collected. Any sales tax from those sales will automatically be collected and then remitted by that marketplace facilitator. So a lot better for you. You don't have to worry about that, and it doesn't impact those economic nexus transaction thresholds as well for you. So let's hop into TaxJar. I'll show you exactly what to do to streamline your sales tax. Guys, so here is TaxJar. We're actually in the dashboard of one of my clients, so I'm gonna have to blur out a lot of this information. But this is how it looks. You can see there's a couple different options at the top: dashboard, transactions, autofile, exemptions, filing history, and I'll go through those real quick. But first things first is you actually have to set up your account and then pick your subscription based on the amount of transactions that you have every single month for your business. So last time I checked, the TaxJar subscriptions start at about $20 per month, which is super affordable. But obviously, the more transactions that you get, the more expensive these plans are going to be as well. So, and then you also have a choice between the starter and professional version. And there are a couple of differences that I'll be able to go over in just a little bit. So let's go through this dashboard right here. You can see these autofile states right here. So what autofile means is that TaxJar will actually automatically file a sales tax return in any of the states that you have set up. It is about $30 to $35 for this autofile fee, but it does save you a lot of time and admin fees compared to having to do it yourself as well. So I do think it's worth it if you are planning on autofiling your sales tax returns. There's also the sales and transactions checker on the right-hand side as well. That shows you based on all of the sales that you have imported into TaxJar, which I'll show you how to do that in just a little bit, but it shows you which states you actually have an economic nexus in. So based on all the transactions that you import into TaxJar through your sales channels, which I'll show you how to do in just a second, this actually shows you which states you have an economic nexus in. And the difference between the starter and the professional plan is, let's say you're coming up on $100,000 worth of sales in Florida, like we keep talking about. If you're at $95,000, obviously you're getting very close, but the starter plan won't show you that you're at $95,000. It'll only show you that, yeah, you hit this nexus as soon as you hit $100,000 worth of sales in the past 12 months. But the professional plan will actually show you how close you are to hitting your nexus in that state. So obviously it'll say you're 95% of the way there, and that'll help you plan out when should I actually turn on my nexus threshold and actually start collecting and remitting sales tax from those customers in Florida, for example. And then if we go back to the dashboard, this is actually a report that I use pretty often for my clients, this detailed sales tax analysis. I'm not going to go into it because obviously all the client's information is on there, but this basically shows you how much expected sales tax you have in each state and then how much you actually collected from each state. And then I use those numbers based on how much we actually collected for our clients and input those numbers into QuickBooks Online if there is any discrepancy between TaxJar and QuickBooks Online. But I have noticed that for the most part, there is a discrepancy just because, I mean, like I mentioned, there's 11,000 different tax jurisdictions. It's very tough to keep track of this, but we rely on TaxJar because obviously it's a software made specifically for sales tax. So when it comes to sales tax, I would rely on TaxJar instead of the numbers in QuickBooks Online. So I use the numbers in this detailed sales tax analysis as my reference point for the numbers that I should be having in QuickBooks Online. So if you scroll down to linked accounts here, this is actually how you can connect TaxJar to any of your sales channels. When you actually do the setup, it'll ask you to connect one of your sales channels, or if you have multiple of them. But if you ever have any new sales channels, you could just press on manage linked accounts and then add in, for example, this client's on Shopify. They don't have an Amazon yet, but if they want to start selling on Amazon, they can just press manage linked account and then actually import those numbers. But like I mentioned, Amazon is a marketplace facilitator, so there are some different rules when it comes to sales tax on Amazon or eBay, Etsy, anytime you're selling on one of those marketplace facilitators. Then we can come over to transactions. Nothing crazy here, literally just lists out every single transaction from the sales channels that you're having. And then autofile, here's actually where you can set up all those auto filings for any states that you have a Nexus in, like I mentioned previously on the dashboard. So this is kind of the dashboard for autofile, where you can select all your settings that you need and make this work. So as you can see, you can edit the frequency, cancel your enrollment status, and then enroll in a new state on the bottom here as well. And then one more tab to the right next to autofile, we have exemptions. I'm not going to click on that because that has literally all of my clients' products on there. But essentially what it is it gives you the list of all the products that it imports from the sales channel. And then you can select whether those items are tax exempt or not, because some items that you might be selling could be tax exempt. For the most part, they're not. But I know, for example, specific medical products, they could be tax exempt as well. So you wouldn't actually have to collect sales tax on those products. So that's the page where you can actually make the distinction for which products you should be and shouldn't be collecting sales tax. And then last but not least, we have our filing history all the way on the right-hand side here. And obviously this just shows you all of your sales tax filings that you've had in the past. So you can keep records of that just to be compliant. And in case anything ever happens with the IRS or a certain Department of Revenue, you have those records for safekeeping. So make sure you keep a good eye out on this, and then keep these safe whenever you download them from TaxJar as well. And then obviously there's nothing here, so nothing to blur out. But once we do actually file a couple sales tax returns for this client, then we're going to be seeing those pop up in here, and we're going to be keeping track of those, downloading those for our reference as well, and keeping those safe, just in case anything ever happens to TaxJar. And you should be doing the same as well. So listen, if you are an e-commerce owner under 10 mil and you want some help with sales tax or whatever you might be dealing with when it comes to e-commerce accounting, I know there's a lot of stuff like inventory, cost of goods sold, in addition to sales tax, keeping track of tariffs and so on. There's a lot of stuff to deal with. If you want any help, click on the first link in the description. We're currently running a free e-commerce QuickBooks online audit where you and I were going to sit down one-on-one and go over your books and find at least 3 things you can fix right now to make your numbers more accurate inside of QuickBooks Online. So if you have any issues with your bookkeeping and accounting QuickBooks Online, just click on that link. I'll be able to help you out. If you have any questions, drop them down in the comments below. And as always, thank you so much for watching, and stay tuned for another e-commerce accounting and bookkeeping tips and tricks video coming out soon.